Hi everyone, I hope you're doing well. As usual, I'm here to help you prepare for the week ahead in financial markets. The three things I'm most focused on are the Bank of England meeting, Fed Chair Powell testifying, and whether it's time to buy the dip in gold. Of course, I will also run through the economic calendar too. GKFX Cambodia presents the week ahead. So let's start with the economic calendar. The general expectation is that the People's Bank of China keep rates steady on Monday. Jerome Powell's testimony on Capitol Hill will be important after last week's hawkish Fed meeting. PMIs for June will be the most up-to-date gauge we have on the economy. After Powell, strong PMI numbers are another thing that could undermine the rally in the dollar. Inflation in the UK just overshot the Bank of England's target of 2%. So let's see if British central bankers start positioning to taper asset purchases back further. Also of note, we have US bank stress tests, where it seems like the Fed could be getting ready to allow those that pass to issue dividends and restart share buybacks. And guys, can I just ask that if you're enjoying the video, please make sure you give a quick tap of that like button. Now, let's dive into what I think could be the big stories this week. Number one, the Bank of England. The story here, much like in the market overall, is inflation. There will be mounting pressure on Governor Andrew Bailey and the Monetary Policy Committee not to fall behind the curve with inflation. UK CPI just struck 2.1% last week, and although the BOE see it coming down eventually, prices look likely to rise in the coming months, and the current policy of bond buying and zero interest rates will look increasingly inappropriate. Any hawkish shift to tackle the inflation should be positive for the British pound. Number two, the dot plot in last week's Fed meeting showing two projected rate hikes in 2023 was definitely a hawkish surprise. The Fed is now talking about tapering, and Fed Chair Powell will have the opportunity to explain the shift in policy plans to Congress this week. In his press conference after the Fed meeting, Powell said the dot plot should be taken with a grain of salt, which saw the dollar ease off its highs and stocks bounce off the lows. His tone before Congress could play a big part in whether investors continue with the knee-jerk higher dollar move on the dot plot or the later corrective move lower after the press conference. Number three, the gold chart. Gold took a serious turn for the worse after the Fed meeting since, as we all know, higher interest rates are the nemesis of gold. But looking at the daily price chart, a correction felt overdue following a big $200 plus rally off the lows in March this year. So is this a dip to buy into? Well, for those interested in such a strategy, we have the 1,800 round number and the 50% Fibonacci retracement at 1,795 as potential support close to current levels. If those give way, there is the 61.8% Fibonacci level around 1,765 and the April 29th low at 1,755. Right, thanks everyone. Good luck trading this week, and make sure to click on subscribe so you don't miss the next episode of the week ahead.